Every American finance video gives you the same advice. Just buy the S&P 500. So you open your European broker, you search for VUAA, the fund every American talks about, and it's not there. Or your broker tells you flat out, you can't buy this. So what's going on? And more importantly, what should you buy instead? Let's clear it up. Hello, I am Wealthy in Europe. Welcome to the channel. Quick note before we start. This is educational information only, not financial advice. Always do your own research and due diligence before investing your money. With that being said, let's get into it. Here's what American finance channels rarely mention, mostly because they aren't speaking to the European market at all. When an American says buy the S&P 500, they usually mean one specific fund, VUAA from Vanguard, or SPY. These are US domiciled ETFs, and as an European retail investor, you generally can't buy them, not because you're not allowed to own them, but because of an European regulation called PRIIP, that stands for Packaged Retail and Insurance-Based Investment Products. Here's how it works. This regulation requires that any investment product sold to an everyday European investor comes with a short standardized document, a key information document, a KID, or KID for short. It's a consumer protection measure. The problem? American fund providers don't produce KIDs because the American law doesn't require them. No KID, no sale. So your European broker legally cannot offer you VUAA or SPY. Now you'll see people online say, you just find a broker that lets you buy VUAA. And I want to be clear, because accuracy is the whole point of this channel. That's the wrong path. You don't need the American fund. The S&P 500 itself, those 500 large US companies you actually want to own, is fully available to you as an European. You simply access it through a different wrapper, and that wrapper has a name. It's called the UCITS ETF. Here's the simplest way to think about it. The S&P 500 is the recipe, the 500 companies. VUAA is just the American packaging of that recipe. A UCITS ETF is the European packaging of the exact same recipe. Same index, same 500 companies, same returns, give or take a rounding error. It's simply built to follow European rules, so your broker can sell it to you without any issues. So instead of VUAA, a European buys something like, and these are examples, not recommendations, CSPX, the iShares Core S&P 500 UCITS ETF. One useful detail, the same exact fund also trades on the German exchange under the ticker SXR8, simply priced in euros instead of dollars. Or there's Vanguard's version, the VUAA. All of them track the S&P 500. All are European legal, and all cost around 0.07% per year, about €7 a year on every 10,000 you invest. Now, one concept you need to understand before you buy, because it trips up almost every beginner: accumulating versus distributing. When those 500 companies pay dividends, the fund has to do something with that cash. A distributing fund, usually marked DIST, pays those dividends out to you into your account. An accumulating fund, marked as ACC, automatically reinvests them back into the fund for you. Nothing to click, it simply compounds in the background. For many long-term beginners, accumulating is the lower effort choice. It reinvests automatically and keeps your paperwork simpler. But, and this matters, how which one is taxed depends on your country. Some European countries tax accumulating funds differently from distributing ones. I won't give you a single tax rule here because it genuinely differs between, say, Germany, Ireland, or the Netherlands. And that's exactly the kind of American advice mistake we're here to avoid. So check your own country's rules or speak to a local professional for advice. We'll cover country-specific tax in a future video. So how does an European actually buy it? 4 simple steps. Step 1. Choose a broker available in your country. Across much of Europe, that might be Trade Republic, Trading 212, or Interactive Brokers. Again, these are examples, not recommendations. Availability and fees vary by country, so check what's offered where you live. Step 2. Search for the UCITS ticker, not the American one. Type in CSPX or SXR8 or VUAA. If you search for VOO and it's missing, your broker is not broken. That's the PRIIP rule we covered. Switch to the UCITS version. Step 3. Decide between accumulating and distributing. Step 4. Buy it. And ideally, automate it with a monthly investment plan. So that way you will stop trying to time the market. So it's time for a quick recap. Number 1. The S&P 500 is not off limits to Europeans. Only the American fund is, the VOO. Number 2. You buy the S&P 500, but you just need the European wrapper instead, a UCITS ETF like the CSPX or the VUAA. Number 3. You have to decide and choose between accumulating and distributing, and check your own country's tax rules before you do it. Number 4. Pick a broker, buy the UCITS ticker, and automate it monthly. Once more, because it matters. This is educational information only, not financial advice. Always do your own research before you invest. With that being said, thank you all for watching, and I'll see you in the next video.